Hello guys, today's Monday, 2nd of October. It's first trading day in October and last quarter has officially started. Historically, the worst month for the stock market is behind us. So let's take a look what happened on the market in the past week. My portfolio finished the month with negative 2%. Major indices also ended it in negative. If we take a look at S&P 500, we see that last week it finished with approximately 0.60%, and for September, S&P 500 was down around 5%. Technology index Nasdaq was flat in the past week, and for the month, top 7 technology stocks dragged it down, and it finished September with negative 5%. Sentiment on the market is turning negative, and that is also seen on Fear and Greed Index. At some point last week, it was in area of extreme fear. Big factor for negative sentiment was fear about US government shutdown. They reached the deal just few hours before the deadline, and they postponed the decision until November. Major mover last week was Nike. They reported a very strong earnings and the stock went up 10% after the report was released. On the other hand, Amazon stock dropped on Tuesday after Federal Trade Commission sued them for unfair competition. Right now, it's really hard for equity markets because bond yields rose to new highs not seen from October 2007. 10-year Treasury bond touched 4.6% last week before it pulled back to 4.57 level. It was a really strong movement in September as yields were around 4.1% at the beginning of the month. Jump in yields was mainly fueled by Fed remarks and their interest rates decisions. They clearly stated that we can expect higher interest rate environment for longer, and this spooked investors on the markets. Last week, bond yields in Europe jumped as well because investors are concerned about high interest rates environment. If we take a look at 10-year German bond, we see the jump here. It jumped to 2.9% level and then it pulled back again. If this momentum continues throughout the end of the year, we could see additional consequences in the economy, as higher borrowing costs for companies and households would additionally affect economic growth. There are also student debt loans in the US. Borrowers will start repaying them this week after a 3-year break. With very high inflation in the past years, many borrowers couldn't put extra money aside to pay the bills. This could cause a pullback in their spending. I think it won't make a major difference on national level, however, it will be reflected on consumer spending data. Businesses like online businesses, bars and restaurants could be one of the most affected. Besides rising borrowing costs and huge national debt, inflation data index PCE was released this week. Fed gives special attention to PCE when deciding on future interest rates. The index rose again to 3.5%, which is the second consecutive increase on year-over-year basis. On month-over-month basis, the index rose 0.4%, which is slightly better than the market expected. On the other hand, core PCE, that doesn't include food and energy prices, came in better than expected. It increased by 3.9% compared to the same time last year. The number is still too high, but it is the lowest inflation rate in about 2 years and a slowdown from 4.3% in July. In Europe, data shows that inflation is easing. Consumer prices increased 4.3% annually in September. That was weaker than forecast and slowest pace in about 2 years. Positive news also came from the UK, where economy grew stronger than expected in the first quarter. European stocks jumped on Friday after data was released. High oil prices are one of the leading factors for high inflation. Oil prices are majorly affected by OPEC production cuts. As we can see from the graph, oil has reached $95 last week in September, which was the highest since November 2022. Oil has jumped 35% from lows in June. That makes inflation really hard to control. So this week I will focus on OPEC meeting in Vienna on Wednesday. I'm not expecting major changes. However, if they decide to ease their policy, we might finally see some drop in oil prices. Besides OPEC meeting, PMI data and data about labor market will be released. That's all for today. I wish you all a successful week and trade safe.